Welcome back to Morning Trade Live. We're focusing on the big picture ahead of the opening bell, where we're seeing some up arrows this morning. Peter Andersen, Chief Investment Officer and founder of Andersen Capital Management, is with us. Good morning to you. Some of your thoughts on what's going on here on the market?
Well, it appears like inflation, at least for now, has hit the snooze button. But of course, we don't really know how long we get to snooze. So I think the market is excited about the data today, but we also have to see a trail of these data before we actually get a good solid sense that maybe inflation has not only tapped the snooze button, but is actually on just flatline. But we don't know yet. But so far, so good.
That is good news. What did you think of the inflation data?
That's exactly what I was just referring to. I was very surprised. I think a lot of investors are, and especially the economists. You know, the economists are, there's no loss of opinions and the variability of their opinions, but most of them were thinking and anticipating that the tariff issue would definitely fuel inflation. And I have to say, they must be waking up today tremendously disappointed, because that does not appear to be the case, at least for now. I mean, we're in an early stage of this, but people were hoping that their calculus was correct and that they would see signs of inflation, but we don't see that. And it's actually remarkable given all the attention we've been paying on tariffs right now.
And so at this point now, what do you think about what the Fed is doing and not doing? You actually said, I don't support rate cuts. Ask me why. Why?
Okay. So, yes, I think I'm in the minority about that, and it's a kind of a lonely field that I'm in right now. But a couple of things. First off, we don't need to tinker with rates if everything seems to be humming right along. And I do think the economy is doing very well. So why tinker with it? That's the first thing. But then the second thing is there are so many variables right now that are trying to, time is our friend, not our enemy. So tariffs, war, conflicts, all those kind of things definitely need to play out before we get a good picture of whether or not we should tinker with rates. And lastly, and probably most importantly, I don't think rates are high. I mean, when you look at the historic levels of rates, I think most people are anchoring on the COVID era rates and are assuming that the rates we have now, like mortgage rates anywhere from, say, around 7%, they think that's abnormally high, but they're not high historically. So you throw all this together, and I think that the rates are perfect the way they are now, not too high, not too low, but there's a lot of pressure on the Fed to make these preemptive changes in the faces of so many different unresolved issues.
Right. I mean, when you think about what the Fed is thinking when it comes to not only inflation, but also labor, what do you think about the labor picture?
I think the labor picture is good. You know, I think people have been anticipating that artificial intelligence was going to take over even my job. And I think that's a massive exaggeration. And I do think that bringing jobs back to America and the companies that are now making massive domestic investments certainly bode well over a longer period for the employment picture. So I'm not worried about that at all.
And what about earnings season? I mean, so far we kicked it off. We've seen some of the banks. We have more to come. We're talking about Johnson & Johnson and Netflix and many others. We've heard from Delta. That was good news. What do you think about earnings season? What are you expecting? Are the estimates too low, too high? Or are they better, hit them?
Yeah, I think that the estimates, of course, have tried to, pathetically, frankly, bake in their impact, their individual impact on these companies, the impact of the tariffs. And so I think wise CEOs and CFOs have kind of hedged their outlook for this earnings that we're seeing now. And the guidance has been demonstrably lower than they normally would, just because they wanted to accommodate the uncertainty of the tariffs. So as a result, of course, we're seeing this string of beats, which the market is not really buying, I think. I think that the explanation I just gave you, probably other people are thinking that too. And they're thinking, okay, maybe they set the bar too low in anticipation of these tariffs and other uncertainties. Let's see what they say about the future. So a lot will depend upon their outlook, not only for the next quarter, but if they can, for the entire year.
How do people make money on equities? I mean, what do you buy here, or what should they be doing?
Yeah, a lot of people are driven crazy right now because, they can't really get out their compass. They can't just, sit in their living room and quietly think about this, because they're getting pounded by all kinds of worrisome information and opinions and what to do. So my sympathy for all those people that are struggling with this. However, we know one thing, that earnings drive stock prices, regardless of where the price of oil is, what the Fed is going to do, what's happening in the Ukraine, are these tariffs going to stick? All those things I would suggest trying to put on the back burner and look at stocks that you think the businesses are sound, that we need, the demand is there for those services or industries. So for instance, cybersecurity is a sector that I have been bullish on for years, and I continue to be bullish. I was bullish in cybersecurity through COVID, through the recovery, and now through all this craziness that we have to endure. We also will always need cybersecurity. So there are some wonderful companies out there, in our opinion, that we think you should be investing in.
Which kind of names? I mean, there's so many names in cybersecurity. Are there clear leaders in your mind that you like?
Yeah, we as a firm love CyberArk, for instance, Palo Alto Networks, CrowdStrike. Those three form a basic core holding for us in our concentrated portfolio. And, CrowdStrike has had its ups and downs, but it's always come back. And those with a sharp pencil, if you really analyze what's going on in cybersecurity, you know that a company like CrowdStrike and many others provide a service that no risk manager will ever skimp on. So let me just cook up an imaginary thought experiment for you. Say you're on your board of directors meeting and it's your turn to talk about cybersecurity. Do you think anybody in charge will ever make a formal announcement to the board saying, yes, we've got it all covered, we don't need to extend the budget on this, we're fine, smooth sailing ahead? Nobody would ever do that for a number of reasons. First, risking their own professional opinions, but also the fact that we know this is a continuous developing industry, always new threats, always new counter threats, and that's a kind of business that we really love.
Do you think the market hits new highs again and again? Yesterday we saw a closing high, record high for the NASDAQ 100. Again, between now and the end of the year, do you expect a lot of new highs for the S&P and NASDAQ?
Well, based on my outlook that I think industries are doing quite well, and that there are many stocks that are maybe less than fairly valued at this point, I do think, and I also think that these factors that we're worried about will play themselves out with enough time. I think we have enough time through the end of this year to get a better resolution on all of these things. And a better resolution means less uncertainty, and less uncertainty usually means a better market. So yes, I do, in our opinion, think that the market will end higher than it is currently.
Peter Andersen, Chief Investment Officer, founder, Andersen Capital Management. Thank you so much. Great to see you.